Okay, welcome back to MBA 507. Yesterday, it was my afternoon off, so I was home and I had on the business channel, Bloomberg Business Channel. And yesterday was the meeting of the uh, Federal Reserve Bank's uh, Open Market Committee meeting. Well, that's where they get together, the directors of the Federal Reserve regional banks, and they decide on their policies for the next month or two or three. And it has an impact on interest rates. And then after their announcement of their meeting, the chairman of the Federal Reserve, Jerome Powell, gave a press conference. So I was looking at this channel and I was thinking of you folks, and there was a lot of information coming across the TV at me that I thought would be good examples to illustrate the efficient markets concept. So the first thing I turn on the TV, they're scrolling, they're talking to different economists and financial analysts, and then there's a bar on the right side, a column that's just giving news snippets from around the business world. The first thing that happened that I saw was Boeing shares had dropped because they had $5.5 billion in cost to cover higher facility expenses around the 787 Dreamliner aircraft. The costs were out of control, and this is going to cause a delay in delivery of the aircraft that are on order by various airlines. So it's going to have a negative impact on their revenues, on their cash flows. So the market sees that information and digests it, interprets it, and it sends down the price of shares as people start selling the shares of Boeing. And people don't want to buy them at the current price, so the price drops, and then people will start to buy them again. Excuse me. I turned the TV on around 1:30 during the Federal Open Market Committee meeting, and it's not broadcast. And at 1:45, this channel continuously gives you the updates on the various market indexes. The four big ones being the Dow Jones, the Standard & Poor's 500, NASDAQ, and the Russell 2000. Now, the S&P, the Dow Jones, a lot of people don't realize it, but the Dow Jones is a microcosm of the stock market. The Dow Jones is made up of, I forget, 50 or 75 stocks. The Dow Jones Industrial Average is only 30 of the biggest well-known companies. Okay, the Dow Jones Industrial Average. And they have a transportation sector, and they have a banking sector, and other things. The S&P has 500 stocks in it. That's why they call it the S&P 500. And the Russell 2000, as you may well intuit, has 2,000 stocks in their index. So it's a broader-based metric. Okay. So at the time I turned the TV on, the S&P was up 1.47%. The Dow was 8.4%. The NASDAQ was up 2.39%. And the Russell 2000 was up 1.5%. Okay. After the announcement came out, approximately half hour, 45 minutes later, the S&P was up 1.49%, so it jumped about a half a point up. The Dow went up to 1.1, so it went up about a quarter of a percentage point. The NASDAQ went up to 3.1, so almost a full percent, not quite, about 0.8%. And the Russell 2000 went up to 2.14, so it went up about 0.75 percentage. Now, what's interesting is by the end of the day, at 4 o'clock, the closing bell, the S&P was down 0.15%. The Dow Jones was down 0.38%. And the NASDAQ was down 0.02, so that's negligible. So it's basically unchanged. And the Russell 2000 was down 1.38. What does this mean is the first news out of the Federal Open Market Committee meeting was that they weren't going to raise rates at least until March. So the market interprets that as a good sign. Money's going to be, again, cheap. The interest rates are going to be low. Money's going to be cheaper to borrow. Companies will be doing that. But then when the chairman, Powell, came out and during his press conference says, well, we're going to stop adding investments. They're going to stop buying government bonds and, in fact, start selling them. And then they're probably going to raise rates in March. That had a negative effect on the market, except for the NASDAQ, which was up, but up fractionally. Okay. The other thing that came out while I was watching the Business Channel was they're saying if Russia does invade the Ukraine, it's going to cause a $10 spike in the cost of oil. Oil was hovering around just under $90, so that's going to push it up to $100 a barrel. Soybeans were up to a 7-month high because of concerns of the growing season in South America. We're in our winter, they're in their summer. Their soybean crop is going to be less than they thought. Supply and demand, the market sees that, and the price goes up. The futures price goes up, okay? The Bank of Canada signaled that rate hikes are imminent, just like a Federal Reserve Open Market Committee said we're going to raise them in March, 2 months from now. Orange juice prices in Florida were soaring up because they've been having some cold weather down there, and this weekend they expect temperatures in the 30s, which is a frost. My sister-in-law lives down there. My wife spoke with her the other day, and she said she had to scrape her windows. So they had a frost, and she's in the Tampa Bay area. That's where the oranges used to be grown, in that area, and a little bit north of there from Ocala on down. But they've had a couple frosts 2 or 3 decades ago, and they moved farther south. Well, that cold weather is going farther south, and it's going to endanger the crop. Not as many oranges, not as much juice. Supply and demand push the price up. The investors that are buying and speculating in the futures market are pushing up orange juice prices 2, 3, 4 months down the road. All right. The people that they had interviewing them, you get a whole smattering. It's just like a cross-section of the population. Some of these financial analysts and economists were pleased with the Fed's announcement and Chairman Powell's press conference. Some were disappointed and some were excited, depending on how they interpret things and look at things. So it's across the board. You have some people that agree with the way the Fed is handling things, approaching things, trying to glide in and manipulate the economy without doing it in a herky-jerky motion. Their big job now, everybody agrees on, is to try and get inflation under control. The thing is, how do you do that? Some people say raise rates now, don't wait till March, and keep raising them, and the market will self-correct. It is a balancing act. I happen to have a ruler here. And when things get out of whack this way, well, the market with supply and demand will tend to correct. It's a self-leveling, self-balancing thing, this beautiful system we have called capitalism. Because as prices go up for goods and products, people will buy less of them. I know you can use your own experience. We've seen in the past when gasoline got to around $4 a gallon is when people started changing their driving habits, not driving as much, driving slower, not going as far. So every product out there has a tipping point when the population will start lowering their purchases of that particular commodity. All right. It's not too long. I just want to look at some of the notes I have here if I'm missing anything. That's about it. Just wanted to give some examples of the efficient market. And again, I'm happy to wandered upon them just by happenstance, and thought of you guys and say, hey, that would be a good short little video to throw out to you guys to give you some real world practicality of the applications of the theory that's in our textbook. These things, everything in the economy is interrelated. Okay, we have the COVID pandemic upon us. We're starting to cope with it. We're in our second year now. This Omicron is running rampant, highly infectious, but not as serious as the Delta and other variants have been. So people are starting to come out and eat in restaurants more, travel. The restaurants are doing a little bit better. The airlines are doing a little bit better. Hotels are doing a little bit better. That's going to get people moving again. That's going to add to the inflationary cycle. You got more people chasing a limited number of meals out there, limited number of gallons of gasoline, limited number of seats on airplanes. Prices are going to go up. So it's going to be interesting to see what happens the rest of this year with this curse of inflation that we have upon us, and what the Federal Market the Open Market Committee of the Federal Reserve, when they raise rates, how much they do raise them. I've seen some people expecting a 0.5% rise in March. That's a big jump at one time. Now, the other thing we have to keep in mind here, that since roughly 2008, that's what, 12, 13, 14 years ago, when we had the recession, the meltdown, the Federal Reserve, the White House, and government, U.S. government, applied pressure to the Federal Reserve governors to lower interest rates to stimulate the economy, get the economy moving again, to get out of the credit meltdown caused by the subprime mortgage lending, and to prime the pump to get the economy up and running again. They lowered interest rates drastically, and interest rates since that time have been as low as I've seen them in my lifetime. And as you can see from the gray hair, I've been around quite a bit. And I also believe, and you could probably back this up with fact if I had done some more research on it, that they are artificially low because of the pressure to keep the economy booming and going once it got recovered from the 2008 meltdown. So the rates are artificially low, and there was been pressure to keep them low, but now with inflation going, they're going to start raising them, and it's going to be interesting to see how much they raise them. Usually when they raise them, it's a 1/4 point. Again, I saw some experts on the business channels talking about a 0.5 point raise the first time in March, and that could be so because they didn't raise it yesterday. They could have done a 1/4 yesterday and a 1/4 in March. Instead, they're going to do the 0.5 point in March, and it's going to be interesting to see how the market reacts to that. The market should go down as money becomes more expensive to borrow. It increases the cost of borrowing, the cost of doing business, the cost of investing, and as that plays hand in hand with our risk and reward trade-off. If you cost you more to borrow money to make an investment to put a new machinery in or expand the plant, it means you're going to have a higher return from that investment to expand the plant or put a third shift on to recover the cost of the money you're borrowing to do that project. So it all relates. Everything's interrelated. What happens in China, what happens in Africa, what happens in Europe affects us here. What happens in America affects Europe and China and South America and Africa. With the global economy, prices are moving. We still have the bottleneck of supply stores. I don't know if you folks have been in stores lately, but it is noticeable that there is, just past a used car dealer, or not a used car, a new car dealer, they don't have inventory on the lot like they normally do. A friend of mine just, he goes to Florida for the winter, retired doctor I play golf with. He had to wait 4 to 5 months for his new Lexus. He finally got it. He was hoping he'd get it before he went to Florida in January, and he did. He got it mid or late November, but he was waiting for it since I believe July. He ordered it. All right, so just wanted to think of you guys and wanted to give you some examples. Think of the we've got this book. You paid a lot of money for it. There's a lot of good knowledge in it. But as you read the book and pick up things, and especially those 5 basic principles of the foundation of finance, keep those in the back of your mind or the side or the front of your brain, wherever you do. And as you go through your daily lives, you can, if you're attentive, you can see those principles at work. Okay. So, it's not just words in a book. It is how the economy really works. Okay. So that's all I want to say. So 15, 16 minutes, just to let you know, I'm thinking about you guys, and I'll be getting stuff out this weekend for the next chapter. And I'm going to make a couple of announcements in the next stuff I send out, probably an email, written things, just a couple administrative things here and there. So take care and good night. Hopefully you'll see this before the end of the semester. Take care. Good night.